Yeah, because I've heard the argument that trade's causing the uncertainty is keeping the prices low. I've heard that argument from a Fed president from one of the districts. So you remove that uncertainty, prices then would naturally rise. So then could there be a point, or I guess my question is, how big of a impact on monetary policy would removing that uncertainty?
So I would just say that if we were to have a sustained reduction in trade tensions, broad reduction in trade tensions, and a resolution of these uncertainties, that would bode well for business sentiment, which is trade uncertainty has been weighing on business sentiment in our judgment and the judgment of many analysts, and ultimately it could affect activity. I wouldn't expect that the effects on activity or confidence would be immediate, or would there be immediate effects in economic activity. I think it would take some time after the recent things, but I do think it would be quite positive over time. You come back to the question of raising rates, so that's really about inflation, and we haven't yet. We just touched 2% core inflation, to pick one measure. Just touched it for a few months, and then we've fallen back. So I think we would need to see a really significant move up in inflation that's persistent before we even consider raising rates to address inflation concerns.
Brennan Greeley, the Financial Times. The other thing you've talked about in this review is the gains that a super high pressure labor market have, particularly for the communities that you're talking about. You mentioned it just now when you were talking. If that's something that you're identifying and that's something that the Fed is learning more about this year, why not continue to push those gains, particularly for people who are reentering the labor force?
Well, I think we're doing that. I mean, I think we're keeping. I think we've made very substantial adjustments to policy over the course of this year. If you think about it, we entered the year expecting some further rate increases. We went to patient. Now we've done 3 rate cuts. It's a very substantial shift, and the effects of it will be felt over time. So we feel like those shifts are appropriate to support exactly the outcomes you're talking about, which are a continuing strong labor market, continuing strong job creation.
So if you were to describe the shifts that you've made so far, it wasn't just about trade uncertainty. It was about specifically these kinds of high-pressure labor gains that you've talked about.
Well, no, it was. So we've said it was about 3 things. It's been about the slowing global economy. You have a synchronized slowdown in economic activity around the globe. It's been building for just about 18 months now, and that's having an effect on U.S. activity. That's part of the weakness in manufacturing, export, and business investment. We've had trade policy uncertainty, which we think also has been weighing on activity and investment and sentiment. And we've had inflation, which we've called out the risk of inflation running persistently below 2% as a risk that we needed to address. So we've been doing it to address all of those things. I would say the gains in the labor market have been great to see. It's particularly the fact that people at the lower end of wages have been getting most of the benefit of most of the wage gains in the last couple of years. That's a great thing. You know from our Fed Listens events that we've been hearing from people who live and work in low and moderate income communities that this is the best labor market they've seen in their lifetime, things like that. And by the way, that there's still so many people who are still not in the labor market yet, and that there's just a lot more good that can be done there. At the same time, we have to think about the whole economy. And but yes, those gains are very positive. We do call them out. They are a reason for us to want to extend the expansion, and that's something we're committed to doing.
Victoria. The Fed's balance sheet, you all recently resumed purchases of Treasury bills, and I was just wondering, how long do you expect that to continue? And given the fact that, the repo operations, it seems like the Fed is having to increase the amount of liquidity, temporary liquidity that it's injecting into the system. Do you still feel like it's just that there is not enough reserves in the system? Do you feel like you have a good sense of what's going on there?
Okay, so on how long, what we said is that we expect bill purchases to continue at least into the second quarter of next year. And we said that temporary open market operations we expect to continue, I think, at least until the end of January, I believe. Yeah, the end through January. In terms of the causes, so there's a lot of forensic work going on by us and by market participants and all kinds of analysts. And, one thing is that we think we need reserves to be back up to the level, the minimum level of reserves that we can have during the various fluctuations that you see with reserves is something like 1.45 trillion or a little higher, and that's the level in early September. So we're going to be adding reserves to get back to that place. That's one thing. There are also it may be one thing that was surprising about the episode was that liquidity didn't seem to flow as one might have expected. We had surveyed the banks carefully about what was their lowest comfortable level of reserves, and many banks that were well above that level did not take that excess cash and invest it in the repo market at much higher rates. They didn't do that. And so the question is why, and are there things that we can do that adjustments that we could make that would allow liquidity to flow more easily in the system without in any way sacrificing safety and soundness or financial stability. So we're looking at those. Those are not things that can happen that can really address the situation in the short term, but those are a range of things that we're looking at as well.
Howard Schneider with Reuters, and thanks for the questions. I wonder if you could give us a little more texture on sort of what the strongest or most important case is for feeling that you've now taken out adequate insurance. Is it the response you're seeing in housing and other parts of the economy, arguably to the cuts made so far? Is it the fact that the risk environment out there globally has shifted a bit and abated a bit? Or is it something different, in the financial markets, the fact that the yield curve has righted itself, et cetera?
Honestly, it's really there isn't any one factor. It's really the whole range of economic data, and also what we see as about our stance of policy, which we believe is the appropriate stance. It's really both of those things. Again, if you look at the performance of the economy through this, the consumer sector has been quite resilient. Witness today's GDP report. And it's just, again, all the things I went through earlier suggest that sector continues to be strong. We know that the manufacturing, investment, trade, export sector has been weak. That continues, but nonetheless, overall, we've got an economy that is showing moderate growth. And we think that today's setting, we're now at 1.5 to 1.75%. That is, we believe, an accommodative level and a level that will support that outlook that we have.
Really, this is kind of a one-legged recovery, that unless you get some impetus from other things, exports, investment, that it's going to weaken further at some point.
We don't see any evidence of that. What we see is that the consumer sector continues strong. Again, low initial claims. It's all the data we monitor. Obviously, a very broad range of data. We also see now, I think, more clearly the effects of more accommodative monetary policy on various kinds of consumer activity. You're seeing strong durable goods sales. You're seeing housing now contributing to growth for the first time in a while, 0.2, I think, this quarter. And you're seeing retail sales. The retail sales number, the PCE number, as I mentioned in today's release, was 2.9%. So that's good. And I think more broadly, monetary policy is also supporting household spending and home buying by keeping the labor market strong, keeping workers' incomes rising, and keeping consumer confidence at high levels where it currently is.
Okay, Scott Horsley with NPR.
Thank you, Mr. Chairman. You're just talking about how the lower rates have affected consumer behavior. Is there a concern that there's just less potency on the business investment side, that you're, in effect, pushing on a string?
Well, I think monetary policy works through the channels that we understand. I think the effects are clear in what we think of as the interest rate sensitive sectors, which are some of the ones that I mentioned. I think interest rates are a factor in business investment, but I don't believe they're the main factor, a main driver. And I think what one would like to see to support greater manufacturing activity, business investment, and exports would be a global recovery. And, there's a lot of monetary policy accommodation and some fiscal accommodation, maybe, in the global economy now. Not here, but perhaps elsewhere. And that should support growth in the global economy. And again, resolution of our trade issues would contribute to that over time as well.
Chris.
Thank you. Chris Rugaber at Associated Press. You mentioned Fed Listens a couple of times and what you've heard from people there about how it's benefited disadvantaged or lower income workers, the hot job market we have. Has the Fed thought about institutionalizing something like Fed Listens and maybe taking in some of this input from people that you don't always hear from? Things like the Beige Book focus on businesses. Has there been thought of bringing in folks, say, from community groups more regularly? Thank you.
We think that Fed Listens has been a great success for us, and I'm sure we will repeat it. In fact, I would imagine that this entire monetary policy review will become institutionalized and be done every few years. I would say this. In the Beige Book, we talk to educational institutions, healthcare institutions, community groups, labor groups. It's not just businesses. And by the way, all of those groups are also represented on the boards of our regional banks. We also meet quite regularly at the board with representatives of low and moderate income communities. And so we're very conscious of that we represent all Americans, and we need to hear all of their perspectives. That's why we talk about how low the unemployment rate is, the aggregate unemployment, but we also talk about groups that haven't experienced that yet. And so we try to remind ourselves that we serve everybody.
Steve Matthews.
Steve Matthews with Bloomberg. You mentioned housing and today's GDP data. When you look at that, do you believe that you have achieved a soft landing or are achieving a soft landing in the sense that we're moving to trend growth for the rest of the year and next year?
So that is our outlook overall is for moderate growth of around 2%, which is pretty close to trend. That's our outlook. Could be better, could be worse. You never say you've achieved it, but that's our outlook. And we feel like our current stance of policy is appropriate as long as that remains broadly our outlook.
Donna, and then Greg.
Donna Borek with CNN. Chair Powell, setting aside market expectations for today's rate cut, obviously 97% sort of expected that this would happen today. Can you tell us a little bit more about the rationale behind moving at this particular meeting as opposed to waiting 6 weeks and cutting in December? And if there was any discussion about that around the table? Thanks.
Yeah, I think this seems to be the right movement. You can see that we had our usual range of perspectives, range of views, but in the end we had a strong vote in favor of this action. I strongly believe it's the right action. I strongly believe that the actions we've taken over the course of this year have been the right things to do for this economy and are supporting economic growth and will do so in the future.
Okay, Greg.
Thank you. Greg Robb from Market Watch. Chairman Powell, it seems that the differences all across the country, there are different regions are reacting differently to the China trade, and some regions are much weaker than others. There's this urban versus rural divide, the coasts versus the middle of the country. How does that factor into your policy decisions?
Monetary policy is famously a blunt instrument, so we can't raise interest rates someplace and lower them other places. But we're very conscious. The first thing to know is to understand that and we've called that out, as you I'm sure know, in one of our recent monetary policy reports to Congress, the sort of rural-urban disparities in employment, in growth, in all kinds of things, in health outcomes. It's a big and growing set of differences. We don't really have the tools to address that, but we call things out that are important to our economy that we may not have the right tools to best address them, but we call them out because we're spending all of our time with the economy, and those are issues that maybe have to be addressed by legislatures and at the national level and at the state level.
Don.
Oh, could I
and
follow?
Virginie.
Sorry, could I follow? Quick, sorry. Just so are you asking Congress to do something now, or will you ask them to do something down the road? Thank you.
I'm not asking Congress to do anything right now. I sometimes have noted that it would be appropriate. I put it this way. We do what we do, which is we're assigned a job, which is maximum employment and stable prices. We do financial stability. We do bank regulation. The U.S. economy faces significant longer-term challenges around potential growth, around labor force participation, around disparities of income and wealth, around all kinds of things. And those are issues for Congress. They're not issues for us. But if you really want the U.S. economy to be all it can be and raise the potential growth rate of the United States, you need proper monetary policy. But really, it isn't monetary policy. Really, it's fiscal policy that supports, inclusive growth.
Don Lee with the LA Times. I think you said, Chair Powell, that the primary positive development in risk to the outlook was on trade, and specifically the prospects for Phase 1 agreement with China. But given the ups and downs of the trade dispute and that several truces and tentative deals have fallen through, are you concerned about developing monetary policy guidance, if you will, that's dependent on good part on the wins of the trade negotiations?
Yeah, that's not how I would characterize it. I noted that it may be that there's been progress there toward away from bad outcomes and confrontational outcomes, and it seems like there's the makings of a possible settlement there. I didn't say we're baking that in or anything, but I'm just noting that that's the case. As with Brexit, it's still quite uncertain what will be the result of the election and what the ultimate result will be. But I would say that the tail risk of a non-negotiated, no-deal Brexit seems to have decreased. Just as I would say that the situation in our trade negotiations with China seems to have taken a step closer to resolution. That's all I'm saying.
If the Phase 1 agreement then doesn't work out, then would we be back at making monetary policy that would?
That's one factor among many factors that factor into our assessment of the outlook. And if things happen that cause us to materially reassess the outlook, change our assessment of the outlook in a material way, then we would act accordingly.
Virginie and then Paul.
Virginie Montet with Agency France Press. Thank you. The Fed has pointed out many times in the past the rising inequality over those past decades and how that could be a factor behind sluggish growth. In light of the recent outcome of the strike at General Motors, do you see the union having a role to play, helping to raise lower and middle incomes and promoting more shared growth on the long run?
So not for us to say what the appropriate labor arrangements will be. I will just say on the General Motors strike, it's likely to have taken away a couple of tenths of growth this quarter. That's likely to come back maybe over the first half of next year, and I think it's good to see it settle. But I'm not going to comment on what the appropriate labor arrangements are. That's a little bit far afield from our task here. Thank you.
Thank you, Chairman. Paul Kiernan from Dow Jones Newswires. I wonder what that was. Paul Kiernan from Dow Jones Newswires. Thank you, Chairman. Wondering if you would categorize the current stance of monetary policy as accommodative, or if it's just that neutral was lower than we thought at this time last year. Secondly, we're now 2 years removed from the Tax Cuts and Jobs Act, and the economy is growing at about the same pace it was before, 2%. So given your mention of fiscal policy and the role it plays in supporting long-term growth, is it fair to say that the Tax Cuts and Jobs Act worked the way it was supposed to? Thanks.
Sorry, say again what your first question was. I wrote it down, I can't remember.
Sorry, if policies are updated right now.
Yes, okay. So if you look at where the federal funds rate is trading, it should be in the middle or maybe the lower half of the range of 150 to 175. So that means the real rate is probably modestly below zero. I think my own sense would be that that's somewhat accommodative policy. I would say, though, that there's a range of plausible estimates of what the neutral rate of interest is, and I think many of those who make such estimates have moved their estimate down over the course of many years, and that process continues. But nonetheless, that seems to me to be very likely to be an accommodative stance of policy, and an appropriate stance given the situation we're in with continuing downside risks and that I mentioned. So.
Hi, Jean Young from Market News. I wanted to ask about financial stability risks. Recently, the IMF and some other global policymakers have been expressing concerns over the high level of risky corporate debt. So as rates get lower in the U.S. and around the world, are you more worried about financial stability risks and reach for yield?
So we monitor financial stability risks very carefully all of the time. It's what we do since the financial crisis, as I've mentioned before. Currently, we don't see large imbalances. This long expansion is notable for the lack of large financial imbalances like the ones we've seen certainly before the crisis happened. So we have a four-part framework I'll quickly mention. The first is leverage in the financial system, which is low by historical standards. The second is funding risk, which is the risk of runnable funding, and that risk is also quite low for banks, but also for the non-banking financial sector. If you look at asset prices, we see some high asset prices, but not broadly across a range. We don't see bubbles and that kind of thing. Then that leaves the fourth, which is leverage in the non-financial sector, and that's households and businesses. So with households, again, we don't see leverage. We see them actually getting in very good shape financially in the aggregate. Obviously, plenty of households are not in great shape financially, but in the aggregate, the household sector is in a very good place. That leaves businesses, which is where the issue has been. Leverage among corporations and other forms of business, private businesses, is historically high. We've been monitoring it carefully and taking appropriate steps. So that's what I would say. But corporate debt is one part of a larger part of our framework, and it is something that we're paying quite a bit of attention to. And it's been part of the last couple of shared national credit exams, and we've been monitoring it carefully and taking appropriate action.
Nancy, and then now Sue.
Hi, Nancy Marshall-Genzer with Marketplace. Have the problems in the repo market led you looking to whether the liquidity and capital requirements for banks are too high? Is that something that the Fed might review?
So I think the most important basic thing is to get the level of reserves back up so that reserves move up and down with some volatility. We don't want them to move below the level they were at in the beginning of September, which is, again, between 1.45 and 1.5 trillion. That's the main thing. That's the first thing. And we're on a path to do that between our temporary open market operations and also our bill purchases. In addition to that, we're looking at it's a big, complicated marketplace, and there was one of the surprises, as I mentioned, was that banks that had told us that their lowest comfortable level of reserves was here, they were well above that, and yet they didn't deploy that liquidity when there seemed to be great opportunities to do that. That didn't happen. So why is that? And so we're doing careful analysis of that. You ask, would we lower capital or liquidity requirements because of this? I don't think so. I don't think that's where this goes. I think where it may go, though, is to look at, for example, intraday liquidity, which used to be a common thing. It used to be a common thing for banks to have intraday liquidity from the Fed, what are called daylight overdrafts. That's something we can look at. Also, there are just a few technical things that we can look at that would perhaps make the liquidity that we have, which we think is ample in the financial system, move more freely and be more liquid, if you will. And those are things we would do, but only if we can do it without compromising safety or soundness or financial stability.
Now to
Thank you very much, Chairman Powell. Now it's Oyama from the Asahi Shimbun, a Japanese newspaper. Given this sustained level of low inflation, even in this country, do you think there seems to be a higher possibility that lower inflation expectation will remain going forward? So do you think a Japan-like situation or Japanification of chronically low inflation and interest rates, the U.S. is getting trapped by the Japanification of this situation? Do you think so?
So we of course have watched the situation in Japan and now the situation in Europe, and we note that there are significant disinflationary pressures around the world, and we don't think we're exempt from those. But of course, if you look at our current inflation performance, it hasn't been anything like what we've seen in those other places. But we don't think we're exempt from those pressures, and we are therefore strongly committed to having inflation expectations anchored at a level that is consistent with a symmetric 2% inflation objective. That's what we're committed to, and we'll use our tools to achieve. So we take the risk very seriously. The risk isn't that inflation might run a couple tenths below 2%. The risk is that what we've seen is other economies getting on a disinflationary path that it's been very hard for them to get off. Once inflation expectations start sliding down, inflation moves down, you have the interest rates move down as well, because there's an inflation component in interest rates. And we think the right thing to do is to do what we can now to hold and really move inflation expectations up so that they're squarely and firmly anchored at a level that's consistent with 2% inflation.
Okay, Brian.
Hi, Brian Chung with Yahoo Finance. Another type of balance sheet question, but not necessarily focused on the repo crunch. There was a discussion before that maybe we should move, or rather the Fed should move to a more neutral balance sheet, trying to remove some of the agency mortgage-backed securities that are on the balance sheet and maybe replace them with shorter-term treasuries. I haven't really heard an update on the composure or the composition of the balance sheet for right now. I'm just wondering if the Fed is actively thinking about that right now, and if so, when we might expect to hear something on that.
It's an issue, but it's not an issue that we're currently working on or reaching a decision or anything like that. The question of the longer run maturity composition of the balance sheet is a big one, and it's one we'll return to over time, but not imminently.
Okay, Vivian with the BBC for the last question.
Chairman Powell, this morning the President tweeted that we're seeing the greatest economy in American history. I just wondered, as the chair of America's central bank, what you made of that characterization.
I am going to maintain my longtime practice of not commenting on anything any elected official would say. But thank you.
Thank you.
Thanks very much.
All right, and you have been listening to Chairman Jay Powell of the Federal Reserve speaking to reporters in Washington. We've gotten used to him keeping it pretty tight. Yeah. Came on right at 2:30 p.m. Wall Street time, 3:17 now. He's wrapped it up, and a lot of the questions that we expected, Carol.
Yeah, exactly. Spoke for about 6.5 minutes initially in terms of, explaining the decision that they made and some of the priorities. And then, of course, took questions for roughly about 45 minutes there. I think what's interesting is what caught my attention, he talked about interest rates not a main driver of business investment. And I think this has been one of the things that we're wondering, okay, where are the expenditures, capital expenditures by corporations that would be kind of key to keep this economic momentum going. So he did talk a little bit about that. He said we had a strong vote in favor of today's rate cut, which is interesting. We heard Kathleen Hayes talk earlier about Jim Bullard, right? Who's been a dissenter, and he wasn't. He was on board with this rate cut today. He also noted a material change in the outlook would be needed for the Fed to shift policy stance. One of our Bloomberg terminal users saying that's a hawkish comment, and I would say that we saw some of that play out. I feel like the markets, and I'm just talking equity markets for a moment, kind of bouncing around on that news. We're higher and we were lower heading into that Fed decision. So I do wonder if at some point investors and the financial community start to say, well, wait a minute, there's some optimism from the Fed about the growth outlook and maybe the inflation outlook. And that's a good thing, right? Because we've constantly talked about subpar economic growth. So maybe that's how the markets are starting to read it. It's still a very low rate environment.
And we're going to get into this a little more deeply with another team of experts, but talking about risks having, quote, subsided when asked about various issues that are out there, whether it's Brexit, trade, etc. So, a fairly positive read it feels like the markets have so far. Again, we're going to get into the weeds in just a second, but first, let's get back to Charlie. This is Bloomberg.
This is WBBR New York, WDCH-FM Bowie, Baltimore, Washington, WJZ-FM HD2 Catonsville, WRCA Watertown, WBOS HD2 Brookline, Boston, WNBP Newburyport, KNEW Oakland, KOSF 103.7 FM HD2 San Francisco, and SiriusXM Satellite Radio Channel 119.
From Bloomberg World Headquarters, I'm Charlie Pellet. A move higher for the Dow, the S&P, and NASDAQ. S&P 500 index now up 8 points, little changed heading into the Fed announcement. Right now we have got the S&P up 8 at 3,045, a gain there of just about 0.3%. The Dow also up by 0.3%, up 84 points. NASDAQ higher by 25, a gain of 0.3. The 10-year up 16.30 seconds now with a yield of 1.78%. So stocks advanced after the Federal Reserve cut interest rates as expected and signaled it was unlikely to move in either direction anytime soon as inflation remains muted. Here's Fed Chair Jay Powell. You heard him live right here on Bloomberg Radio.
Today, we decided to lower the interest rates for the third time this year. We took this step to help keep the U.S. economy strong in the face of global developments and to provide some insurance against ongoing risks.
And again, we do have the 10-year now 1.78%. The other developing story today, sources tell Bloomberg, the board of French carmaker PSA Group has approved a plan to merge with Italian-American rival Fiat Chrysler Automobiles. Gold up 0.4%, $14.92 the ounce. Crude oil down 1.4%, $54.75 a barrel. So again, recapping, S&P up 8, a gain of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thanks so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
Them bricks is way too high. You need to cut it.
Well, that's what the Fed did. It cut rates a quarter point, widely as expected. Its third consecutive cut this year, signaled a pause in further cuts unless the economic outlook changes materially. Equity markets, they are near their highs of this session, so they've certainly turned around, rallied to some extent on that news. And in terms of the rate picture, I just want to recap pretty much where we were prior, actually a little bit higher on the shorter end of the yield curve, the longer end of the yield curve pretty much where it was prior to the Fed decision. Let's get into it, though, with our team here. And we've got in the house, we've got Alex Harris, bond reporter at Bloomberg News. Sorry,
who are these people who just wandered into our studio?
And also with us is Josh Wright, chief economist at iSIMS, both in our Bloomberg Interactive Broker studio. Sorry, I'm looking at too many notes today.
Is it Jay Powell? Jay, is that you? Oh, no.
Jay, so nice of you to join us.
It's Josh Wright.
Josh, let's start with you. What'd you make of the decision and the press conference?
Well, we were looking for a hawkish cut, and that's very much what we got with this strong bias to hold.
That's kind of perfect, isn't it?
That's certainly what the market seems to think.
Yeah.
But I was surprised by how explicit the chairman was. He didn't come out and say in exactly these words, but saying a material reassessment of our outlook is about as much of a promise as he's going to make to say, we're kind of done now.
All right, Alex Harris, you were on the desk amid the fevered listening and analyzing. A number of our colleagues weighing in with questions there. Mike McKee and Steve Matthews making his way up from Atlanta to ask a question. What did you make what was sort of catching people's attention? Where were you sort of looking around and saying, well,
We're looking around that how often the reporters in that room ask the same, like a variation on the same exact question. One of the things I talk to people about on the desk is, there's a lot of operational things that were discussed off meeting. And, Powell reiterated, yes, they're going to be, doing Treasury bill purchases at least through the second quarter of 2020. They're doing these repo operations at least through January. And, one of the things that caught our attention, and we pinged, our team in the room and said, someone asked him, how do they expect to remove that liquidity from the market in January and not cause any sort of disturbance? And Powell probably would have said something about, our reserve levels will be kind of more normal, but that's a serious question. And the other thing that kind of caught our attention on that front is, why does the Federal Reserve, that has all these very intelligent economists, seem absolutely bumfuzzled?
I was a little nervous.
I did not know where that was going.
Bumfuzzled. I like the word, as to why banks didn't come in when repo rates spiked last month. And to me, it signals that, they're one of the regulators of the banks. Right. They conduct monetary policy, and yet they have no idea how the two intersect and work off of each other. And that is a little concerning for me.
She's deemed, man. What do you think?
There was a stunning turnaround from just a year ago when you had Simon Potter, the New York Fed, saying, we feel pretty good about reserve levels. We've got a ways to go. And kind of like how Powell had to do the turnaround at the end of 2018 going into early 2019, feeling good about rates, and then suddenly, maybe that was a mistake. Another big turnaround that we saw, though, was look at the market reaction. This is an incredible turnaround for Chair Powell's performance in a press conference. I mean, we were all complaining. I think effective. The market is, nice. This was a hawkish cut, even more hawkish than I and some other people expected, and yet the market is taking it very well.
Up 124 points now on the Dow Jones Industrial Average. We're up about 12 points, so we're looking at about 0.4% higher on the S&P, almost 0.5% higher on both the Dow and the Nasdaq. That is interesting.
The dynamic has really changed, and he even was pretty explicit about what kinds of considerations he'll be looking for before they raise rates again.
Yeah.
And I think that's probably part of why the market took it so well, because a lot of those conditions are pretty remote. Do we think inflation is going to spike anytime soon? Do you think inflation expectations are even going to perk up anytime soon?
But what do you guys make? Because the two-year note was yielding, this is minor, was yielding about 161 prior to the Fed decision. It's now at 159. 5-year was yielding 162. It's now at 160. So we've seen a little bit of a look. What does that mean?
Alex wants to talk.
I think you need to look at it more in the context of the curves. And Scott Meinard from Guggenheim was on Bloomberg TV after the statement was released talking about this very effect, which is the 210 curve flattened after we got that statement. And so I think it's either, he was saying it's either the front end that is repricing, less easing to come, or it's a market that's concerned that more stimulus is going to be needed here because we're going to hit a very, a slow patch for the economy. And so that, flattening and the curves are something that we're going to have to keep an eye on here, not just the outright, benchmark yields.
Recession completely off the table now? Oh, wait, go ahead.
I was going to say, I think there's also the possibility of pricing out the tail risk of the Fed being even more hawkish today than it was. Yes, it was relatively explicit, but again, those conditions under which they would be raising rates seem pretty remote. And tail risk was really one of the big themes. Sometimes the last questions in the press conference, you think, okay, we've heard it, we're ready to go now. But I thought Don Lee from the LA Times really elicited an interesting comment where suddenly we found out, what is it that you think Chair Powell has changed in the outlook? And he said, look, it's the tail risks that are gone. Yeah, we don't know what's going to happen with trade, but we're less concerned that it's going to blow up in our faces.
Which is, I feel like trade was very much front of mind with him the last time we heard from him in this sort of setting, but also in the intervening speeches and Q&As that he's given and his colleagues have given. Are they right to be less worried? Does the bond market and do investors agree with that sentiment, Alex?
I think it's just more that the trade rhetoric has become less inflammatory than it has been. I still think it's a concern. I think, Brexit is still on the burner. I think trade's still on the burner, but I think because the rhetoric around it has been less inflammatory, that it's not an immediate concern. I do want to mention, Carol, you mentioned the inflation, and Powell had a comment where he said inflation seems to be settling below 2%. And Vince Signorella, our colleague here at Bloomberg, we've had this discussion that it's like, oh gosh, if the central banks around the world had to acknowledge that maybe inflation, like a 2% inflation target, is unrealistic and inflation is just going to end up being below there, then then it's like the jig is up. Why do you need stimulus? So then it calls into question every global central bank stimulus program if you acknowledge that inflation might never reach 2% again. And I think that's an interesting comment and something that we should really be thinking about, because now we have to talk about the efficacy of the toolkits and why are we even doing all these things in the first place if this is just where inflation is going to be settling now.
What do you say about that, Josh?
Well, I wanted to go back to the trade point and this idea that we've played Lucy with the football several times now. With yes, the trade talks are on again and they're off again. I think one of the differences here is
slippery football too. At that,
it's very slippery football. But we're heading into a different environment because next year is an election year, of course. So I'm sure that there are a lot of people in the market who are thinking, it's a lot less likely that they're going to blow something up in an election year. That's just kind of the realpolitik from a market perspective.
Right? That's a good point.
No, it's
like if you're the Trump team, the White House team, and you're strategizing about 2020, you've got to start thinking, okay, what are the things that we need to calm and get some closure on, even if it's a mini trade deal or whatever the heck it is, you've got to figure it out. What, you're laughing?
I'm laughing because one of those things on the list, we don't want to wait in there, but we're all probably thinking it, which is probably, impeachment or don't get impeached.
No, I think we can talk about that. I mean, no, I think that's
a concern.
That's absolutely true. I mean, we've got the House, essentially exploring exactly what they're going to do along those lines right now. I mean, when we think about what we're telling our viewers in our weekend show, we're starting to think about Brexit and impeachment and not just the new economy.
Just a reminder, the Fed reducing interest rates by 0.25 percentage point for the third time this year, signaling a pause in further cuts unless the economic outlook changes materially. We're going to continue our conversation with Alex Harris as well as Josh Wright, continuing talking about the Fed policy right here on Bloomberg Radio. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 29 minutes to go ahead of the closing bell. The Dow, the S&P, and NASDAQ are all advancing. Our Fed coverage continues right here on Bloomberg Radio as we reset, recap, and review. Federal Reserve cutting its benchmark interest rate for the third time this year. Also signaled a possible change in strategy. And with that story, here's Bloomberg's Vinny Del Giudice.
Language in the Fed's policy statement is hinting central bankers may soon take a breather. The tweaking suggests are prepared to leave rates on hold to assess the impact of this year's cuts. The next policy meeting is set for December. As with the September statement, Fed officials cited the global outlook for today's easing. So far, the strategy appears to be working. While lower rates do little to combat the uncertain trade picture, unemployment has continued to drop, consumer spending has remained solid. Vinny Del Giudice, Bloomberg Radio.
And one economic note, payroll provider ADP said businesses added 125,000 workers in October, topping the prior month's gains. Services led the increase. Small business hiring moderated. Two developing stories. Sources tell Bloomberg the board of French carmaker PSA Group, parent of Peugeot, has approved a plan to merge with Italian-American rival Fiat Chrysler Automobiles. Also, Francisco Partners Management and Elliott Management Corp. are exploring a sale of Quest Software. This according to people familiar with the matter. Recapping, stocks higher. S&P up 10, up 0.3%. We have got the 10-year up 17.30 seconds with a yield of 1.77%. Gold up 0.5%, $14.95 the ounce. West Texas Intermediate crude down 1.2%, $54.89 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, thank you so much. Well, you're listening to Bloomberg Business Week. It's Fed Day. Let's continue the conversation with our team here. Alex Harris, bond reporter for Bloomberg, and Josh Wright, chief economist for iSIMS, both in our Bloomberg Interactive Broker studio. We kept them hanging around to get some final thoughts as we continue to synthesize, digest a little bit what we heard from Jay Powell. So, Josh Wright, what happens next? As they look at data, the FOMC, Jay Powell and his colleagues, as you look at data, what are you looking for? Jobs day, obviously, right around the corner.
Yeah, that's a big deal coming up on Friday. I think one of the things is when we talk about data dependence, which kind of data is the Fed going to be focused on? In a world where unemployment is already lower than the Fed is actually comfortable with, inflation is pretty soft, are they focused on real economic variables, or are they focused more on how the financial markets respond to them? Because a lot of it has to do with where you think, do you want your policy to be accommodative or neutral? It sounds like Chair Powell wants it to be a little bit accommodative.
Yeah.
What's the deal with inflation? I mean, are we truly in a different environment?
It's like the Jerry Seinfeld question of
What's
Bloomberg.
the deal with inflation?
Inflation. Inflation. What's the deal?
I mean, Josh, what's the conversations you guys are having at your place about this?
It's a lot of head scratching. We've been having this conversation for a couple of years now. It's clear that there are some structural factors.
We were for a long time. Oh, it's coming, and it hasn't.
I think we have to acknowledge that there's some ways in which we're going back to the old normal, but this is a way in which we do not seem to be headed backwards. Right? We've got technology changes; those are deep and long lasting. We've got demographic changes; those are deep and long lasting, and that seems to be holding these numbers down, which actually is helpful for the Fed in a lot of ways.
Yeah, exactly.
But I think also you have it from a global standpoint, and I know RBA Governor Phil Lowe makes this point quite a bit when he speaks that globalization has an impact here, and that's something that I think Powell has maybe quietly acknowledged in remarks. But I mean, that is a factor as well, that it's not just about the U.S., it's inflation broadly, because globalization does change the game a little bit.
And despite the confidence that Fed Chair Powell was evincing today, I think we do need to be concerned about asset price inflation. So traditionally we worry about consumer price inflation, but really it's been asset prices that have been the problem for the last two cycles.
I mean, I don't know if we're there yet.
Yeah, I mean, he was very optimistic. He said, I don't see broad problems. Yes, there's some concerns with the corporate debt market. Seems contained. They have a clear analytical framework that he laid out, but we can't deny the fact that there's a possibility that we could simply get a shock to confidence through some kind of tumble in the stock market. I mean, how many people really feel that all those stocks out there, some of them, I mean, look at what's happened in IPOs this year.
Right. Yeah.
How many people really feel confident that the stock market
But actually, what has happened in IPOs to this year kind of gives me some confidence that I feel like the capital markets have said either you're not making money, so you're going to get beat up, or you're not going to come to market, or you know what I mean? To some extent, I feel like the markets are doing what they're supposed to.
I think that's right.
Cheerleader,
a little healthy popping of bubbles along the way can really help.
And we've seen that, right?
It's true, but it requires continued vigilance. I mean, still, you've got some companies still have some pretty optimistic valuations out there.
Yeah, that's fair.
I think the other point that Josh, and going back to what Powell said about corporate debt, and PIMCO's Anthony Crescenzi was on radio this morning with Tom Keene and John Farrow making this point, is the problem is...
They're Batman and Robin, by the way.
which is which?
I don't know. I'm just saying, I think they're Batman and Robin.
No comment.
But I guess...
This is what happens when we get 90 minutes into the Fed decision. Go on.
But here's the issue, and Anthony Crescenzi was making this point, is that everything is well and good in corporate bonds except when you have to sell. And this is the problem, though. Yeah. And he was making the point that the structure of the markets has changed, and this is where he was equating kind of what happened in the money markets to what could potentially happen with the corporate bonds, in that banks are no longer the intermediaries that they once were, and he said they're now movers. They're not warehousing anymore. They're just trying to move inventory off their balance sheet. They don't want to have it, and so this is going to be the problem if you get waves of investors trying to sell their corporate bond holdings all at once. And this is what that we need to be concerned about, and I think what the Fed needs to be vigilant about.
The law of unintended consequences right there. Powell said that they weren't going to take another look at regulations, but I think you just made the best argument for why they should.
Yeah. She's always good at making. I know. She makes good recommendations.
This is a great roundtable.
I'm not saying who's Batman, who's Robin, who's Superman, who's Wonder Woman. It's all
Batgirl,
all one and the same. All right. Alex Harris, bond reporter for Bloomberg. Josh Wright,
let's not go
chief
there.
economist for iSIMS. I'm going to get out while the getting's good. This is Bloomberg. Payback? Is that what we're getting ready for? And Al
we
Green?
are.
No.
I was like, where is he? Dave Wilson. Isn't that what's his name?
Oh boy.
Isn't that?
I feel good. I feel good.
James Brown.
Yeah.
James
okay.
Brown.
See, it wasn't that hard.
I did a story years ago, and I used I feel good. That's why.
Well, there you go. Our producer Paul Brennan picked that one, and I'm good with it because the question is whether there's going to be a payback, in a sense, for investors in private equity type funds. And, well, Morgan Stanley Wealth Management will tell you the answer is yes, but not so much. And what they're looking at is the multiples that firms or funds are paying in deals. And when they ran the numbers for this year, they use this indicator called enterprise value, looking at both the equity and debt of the company. in a buyout relative to earnings before interest, taxes, depreciation, and amortization. I know it's a mouthful, but it's a pretty common gauge in these kinds of deals to figure out whether they're cheap or expensive. And in the first half of this year, you got above 10 times as an average multiple for U.S. buyouts. And you look back historically, you've never seen that before, at least going back to 2000. And so they're concerned that the price that's being paid up front is going to limit the returns on deals down the line. Now, they're also talking about some other issues, use of debt being excessive in their view, less protection for investors in the credit markets, less room to make interest payments in the companies that are bought, and then something like $2 trillion of money that these funds sort of have that's just sitting there. You put it all together, they're really concerned about where returns are headed, that you're not going to get the 10% or so, or more than that you've had in the past. If you want to know more, folks, send me an email. I get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Dave Wilson, thank you so much. We'll see you in just a bit for your stock of the day. In the meantime, let's get to Bob Moon. He's got your world and national headlines. Hey, Bob.
Jason, the impeachment investigation is moving into a new phase as the House prepares to vote on the process for the public phase of the inquiry. The vote follows testimony from Army Lieutenant Colonel Alexander Vindman, part of the White House National Security Detail, who listened in on Trump's call to Ukraine. He reportedly voiced concerns that he continues to have with missing parts of the written notes from that call. According to the New York Times, he says they omitted crucial words and phrases from what Trump has called the transcript, but really isn't, and his attempts to restore them failed. No big deal, says Republican Congressman and prominent Trump defender Jim Jordan.
I mean, if the changes I think that were outlined in the press were not a big deal, if in fact that was the case.
Back in September, a White House official contended the ellipses did not indicate missing words or phrases. Boeing Chief Executive Dennis Muhlenberg faced another contentious hearing today as lawmakers grilled him on the company's effort to fix the 737 MAX aircraft after two deadly crashes. Bloomberg's Irv Chapman reports.
Chairman Peter DeFazio ticked off a number of safety recommendations from engineers that were not incorporated in the final design or the training manuals, but are now among the planned improvements.
Flight control will now compare inputs from both sensors. Why wasn't it that way from day one?
Mr. Chairman, we've asked ourselves that same question over and over. Back then, we knew everything that we know now. We would have made a different decision.
Congressman Sam Graves, a licensed pilot, said airplane makers should take account of the lesser skills and experience of pilots in foreign countries. On Capitol Hill, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Bob Moon.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
Learn more. Visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's environment of market volatility, Pershing's Prime Services is well positioned to support the needs of hedge funds and other alternative investment managers. Whether Whether it's customized financing or securities lending solutions, platform access, or business expansion, BNY Mellon's Pershing is a prime broker who's committed to this business and agile enough to meet your evolving demands. Pershing helps to solve the needs of clients by advocating for them, providing unwavering strength, deep supply, and award-winning service that is at the core of everything we do. Find out what sets Pershing's prime brokerage team apart.
Learn more about the unique and industry-leading solutions for hedge funds and other alternative managers offered by BNY Mellon's Pershing. Visit our website at Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Now the 3-1. And Springer hits it in the air, deep to left field, and you can kiss it goodbye.
MLB fans, you can hear every call of the 2019 World Series on TuneIn Premium.
And that ball's hit well. Left field, high and deep, that's got a chance, score!
The action concludes today with a winner-take-all Game 7. Will the Houston Astros or Washington Nationals be crowned as World Series champion? Listen live at 8 Eastern to find out. The 2019 World Series is on TuneIn Premium.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
For some, Halloween is a little more serious than candy and costumes. To give your Hallows Eve a truly frightening feeling, turn on Soma FM's special Doom Station to hear a haunting seance of soundscapes made for tortured souls, the living dead, and cursed spirits of the night. Search Doom Special on TuneIn to run a chill down your spine this Halloween.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
The annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line, with both teams ranked in the top 10. Will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out this Saturday, with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell on this Fed Wednesday. The Dow, the S&P, and NASDAQ all advancing. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks jump after the Fed's Powell said an inflation rise is needed before any rate hike. Dow's currently up 89 points. S&P's gained 7, while NASDAQ climbs by 25. Small caps fell 5 points, and the U.S. 10-year yield at 1.78%. 9 of the main 11 S&P sectors are trading higher, led by gains in healthcare and utilities. Only energy and financials fell. Nasdaq biotechs are little changed. Transports sink 196 points. Semis are also little changed, and the VIX is lower by 5%. Leaders to the upside in the Dow, J&J, McDonald's, and Merck, while Chevron, ExxonMobil, and Walgreens led to the downside. Also after earnings, transport, C.H. Robinson plunged 15%. McKesson fell 8%, while GE rose 10%. In deal news, Fiat Chrysler and PSA have agreed to merge. And wrapping things up, some of the names pointing out their bell tonight include Apple, Starbucks, and Facebook. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
All right, thank you very much, Bill. We'll be all over those numbers when they break. That's what we live for. To hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it's time for the Drive to the Close on this Fed Day, Wednesday. David Dietz back with us, President Chief Investment Officer for Point View Wealth Management, looking after about $5.8 billion out in Summit, New Jersey. That's where he joins us on the phone. David, nice to have you back with us, as always.
Thank you so much, Jason.
All right, so let's talk a little Fed since it's top of mind. What did you hear? Because the market, at least the equity markets, seemed to like what they heard from old JP.
Well, certainly they complied with what the market was expecting, which was their third quarter point cut in as many months. But then they talked about the future, and they changed the language a little bit, suggesting that we were not going to expect anytime soon additional rate cuts. But when queried as to what would be the grounds to reverse rate cuts and increase, they talked about seeing more inflation, which by all accounts is not going to come anytime soon. So people liked what they heard. I think the main takeaway for me was they got the rate cut. Rates are going to stay low, but they didn't scare us in terms of their concerns over the economy.
Perhaps Goldilocks, dare I say, David?
Yeah, that's what I think the market heard. Of course, that was juxtaposed with a better-than-expected reading on GDP. We got a 1.9% reading today, which was not as good as the 2 from Q2, but better than the market expected. So that adds to that Goldilocks story.
And so what do you do as an investor here, David? Because, we've had a nice run up here in a bunch of names and sort of pretty broadly. We were talking with Dave Wilson even at the top of the show and thinking about how the markets have generally been reacting. S&P is going to hit another record today, if I'm reading my chart right. So what's not to like here, or what do you especially like, maybe is a better way to ask it?
Sure, absolutely. I think longer term, we're still very constructive. And I think the key metric that I continue to share with my clients is you've got a yield on the S&P of 2%. You've got a yield on the 10-year Treasury well under that at 1.7, which means over the next 10 years, with dividends typically increasing and, of course, fixed income staying fixed, you've got a high likelihood over time of making more money in the market. But certainly near term, any types of of headwinds could develop. Just today, we heard that the much vaunted meeting of world monetary chiefs and so forth in Santiago, Chile is going to be canceled. We were hoping that we could put a bow on phase one down there. That doesn't look likely right now, so that is potential near-term volatility. And of course, there's still concerns over the economy abroad, particularly in Europe, as they face and deal with Brexit. But given the valuation tilt in favor of equities, we're focusing on areas that have lagged a little bit. And to be honest with you, Jason, we like companies that are blockbusters in their field. I go back a generation to what Jack Welch said, that all the profits of every industry is made pretty much by those companies who are number one or number two. So we try and pick them out within industries that we think make sense and invest accordingly.
So Budweiser, Anheuser-Busch, InBev, that's one that falls into that category?
So, Anheuser-Busch, which is basically the merger of the Belgian InBev and, of course, Budweiser here, they dominate the beer industry like few companies in any type of industry do, owning 5 of the top brands across the planet. 18 of their brands generate more than $1 billion in revenues. They got nearly half of the U.S. market, nearly 2/3 of many of the markets in Brazil. But the stock is down 20% from July. There was some weakness in Asia in terms of volumes, but at the end of the day, when there's any kind of hiccup in an industry, the biggest company can squeeze costs further, push harder on their networks, and of course those brands are not to be duplicated. And I think while you're waiting, you've got the 2.5% dividend. This looks good no matter what the economic climate going forward looks.
All right, David, got to ask you about Wells Fargo, because I feel like we've been talking about it every time you've come to visit us or been able to call in. They got their CEO. You must be so happy.
Yeah, I am, and it did get the stock above 50. It spurred at about 10% in the news. It has fallen back. Of course, all the banks, and even today, the banks didn't participate in the rally so much, are still grappling with these narrow net interest margins.
Yeah.
The amount that they're paying is a lot relative to what they can lend. That's hurting them. But again, Wells Fargo has one of the best franchises coast to coast, which gives them tremendous economies of scale in terms of distribution, in terms of branches, in terms of advertising, and I think they can make money here. And again, while you're waiting, you're collecting a 4% dividend. And recently, of course, with the lower interest rates, the refi business is perking back up, and apparently Wells Fargo is getting more than its fair share of that.
All right. And you also like, speaking of dividends, those pharmaceutical companies, those are always a good place to go. Pfizer is the one that you liked, also a huge player. And you're talking about a 3.7% dividend.
Exactly. The biggest sales force in the world, the largest amount spent on R&D. I still don't think the market is giving them enough credit for what they have in the pipeline. I think the 800-pound gorilla over the industry, of course, is politics, and certainly proposals as we get into the political season to radically change the healthcare system. But quite frankly, we have seen that movie before, and certainly I think after the candidates, after the primaries are over and the candidates on the Democratic side start playing for that middle, I think they'll back off some of the most radical plans, and people will see it's business as usual. Pfizer's 52-week high is 44. Right now it's 38. Collect 3.8% and move up another 15% with one of your top healthcare companies in the world. Doesn't look so bad at this juncture.
It's interesting. We're going to talk about some of the political market plays coming up in the final hour of the show. For now, we're going to leave it there with David Dietz, President, Chief Investment Officer of Point View Wealth Management, joining us on the phone from Summit, New Jersey. Love talking names with him.
Yep, I absolutely do as well. Hey, listen, everyone, we've certainly seen a turnaround in the equity markets. We're pretty much hovering near our highs of the day, looking at, I think, potentially records here on the S&P 500, so continuing to churn higher. Stick around. We've got the closing bell on Wall Street. Also take a look at some of the movers and shakers. Bloomberg Business Week, Carol Massar, Jason Kelly. This is Bloomberg.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Watford, there's nothing like coming back to a warm home after a long day at work, especially when you've been stuck at a cold train station in rush hour for what seems like an eternity. Luckily, with Hive Active Heating, rated 5-star on Trustpilot, you can turn your heating on from wherever you are. And now with our new Hive radiator valves, you can even control your heating room by room. Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Now the 3-1. And Springer hits it in the air, deep to left field, and you can kiss it goodbye.
MLB fans, you can hear every call of the 2019 World Series on TuneIn Premium.
And that ball's hit well. Left field, high and deep. That's got a chance. Score!
The action concludes today with a winner-take-all Game 7. Will the Houston Astros or Washington Nationals be crowned as World Series champion? Listen live at 8 Eastern to find out. The 2019 World Series is on TuneIn Premium. Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
For some, Halloween is a little more serious than candy and costumes. To give your Hallows Eve a truly frightening feeling, turn on Soma FM's special Doom Station to hear a haunting seance of soundscapes made for tortured souls, the living dead, and cursed spirits of the night. Search Doom Special on TuneIn to run a chill down your spine this Halloween.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
sideline, the Van Fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on
Search
the right.
NBA Today to start listening.
Financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Record on the S&P, the Dow, the S&P, NASDAQ, all advancing on this Fed Wednesday. Folks from Standex International ringing that closing bell as we await earnings from Apple, Facebook, and Lyft, among many others. Stocks advanced after the Federal Reserve cut interest rates as expected and signaled it was unlikely to move in either direction anytime soon as inflation remains muted. David Dietz is president of Pointview Wealth Management. He was our guest moments ago, right here on Bloomberg Business Week.
I think the main takeaway for me was they got the rate cut. Rates are going to stay low, but they didn't scare us in terms of their concerns over the economy.
S&P 500 index at the close up 10 to 3,046, a gain of 0.3%. Dow Industrials up 117, up 0.4. NASDAQ up 27, a gain there of 0.3%. The 10-year up 1930 seconds, yield 1.77%. Gold up 0.6%, 14.96 the ounce. And West Texas Intermediate crude retreated 1.2%, 54.90 a barrel. Brent 60.56, a drop there of 1.7%. A developing story. Sources tell Bloomberg the board of French carmaker PSA Group has approved a plan to merge with Italian-American rival Fiat Chrysler Automobiles. A combination that would create one of the world's largest auto manufacturers manufacturers. Shares of Fiat Chrysler rallied today, up by 5.3%. GE surged the most in 8 months after the Boston-based manufacturer raised its 2019 cash flow forecast for the second straight quarter. General Electric shares up today by 11.4%. Ahead of earnings, Apple, little change, down 3 cents today. Facebook declined $1.06, down 0.6%. So again, recapping, a move higher for the Dow, the S&P, and NASDAQ. S&P 500 index advancing today by 10 points. That was a gain of 0.3%. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
Your next move will be your last.
Nobody move a muscle.
Damn, Sippy, you got some moves.
And I'm moving on from town to town.
Time is money. Let's go. Come on, move it.
Shake it up. Shake it up.
Bloomberg Business Week, Movers and Shakers, with Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed. It is time for the Wednesday edition of Movers and Shakers. I'm Carol Master along with Jason Kelly. Big picture, though, first. As we await one of the big earnings reports, we're talking about Facebook, yet to cross the Bloomberg, but we'll bring it to you as soon as it does. As for the trade, a little bit of a mixed picture, or kind of even split. 270 names in the S&P 500 higher today, 231 lower, 4 unchanged. This really after stocks rallied following the Fed decision, and more specifically, I think the comments that we got from Fed Chair Jay Powell. So certainly a positive bent when it came to the equity markets. And like I said, kind of an even split when it came to groups in the S&P 500.
Your number one gainer? GE,
yeah.
General Electric,
Bullish
up
day.
11.5%. Larry Culp may be starting to find some believers there on Wall Street. Now, let's keep in mind, before everybody gets too excited, it's still excuse me, let me just get the exact right number. It is still a $10 stock. So a move of that magnitude is $1. But this is at least directionally where a lot of people have been saying,
yeah.
Obviously they expected GE to go. It's maybe taken a little bit longer. There have been some hiccups certainly along the way for Larry Culp. This is not an easy job for sure. He's had to make some very difficult decisions, especially around freezing that pension of late. And yet you've got some folks saying that this turnaround, some of these dispositions, there was a new boost to the cash flow outlook, and that is really what got people a little bit excited today.
Yeah, I want to mention, just taking a look at the S&P 500, your number one decliner, we're talking about a transportation logistics company, and we're talking about C.H. Robinson. That was your number one decliner in the S&P 500. That stock was down about 15%. And just taking a look, it also, of course, had to do with earnings. We're smack in the middle of earnings season, and what happened is that we did see some disappointment over that company's results. Forgive me, I'm trying to get my story up, and it's not coming. Here it is. Their third quarter results, they were not exactly what Wall Street was forecasting, and so there was some disappointment. They missed their earnings per share estimate. They also said the outlook may weigh on trucking stocks, and that's certainly an important thing when we look at what's going on in the economy.
Let's take a look at Facebook. Crossing right now, third quarter adjusted revenue coming in at 17.38. The estimate was 17.09. That's a beat. Third quarter EPS coming in at 212. That's versus 176 year over year. Third quarter revenue, I'm looking for an apples to apples
17.65, and that looks like it's a little bit better than forecast, 17.35 billion.
On the revenue. We don't have an apples to apples comparison in terms of estimates for EPS quite yet. We will bring you that when
I think it was
we
$1.76 year over year. 212 versus $1.76.
That's year over year, so that's not the estimate. So just looking for the estimate there.
Oh, right. Okay,
so we will bring you that. But obviously the top line being something that folks are very concerned about. That's the redhead coming across. And just to reiterate, 17.65 versus 17.35. So beating on the top line.
Stocks just up about 1.5%. We're going to look at clicks and ad revenue. These are all, certainly important metrics. I do also want to mention Lyft, because we just saw a red headline cross the Bloomberg. Lyft boosting its year revenue forecast, saying it sees fiscal revenues of $3.57 to $3.58 billion. It had seen $3.47 billion to $3.5 billion. So let's take a look at what's happening with Lyft in the after hours. That stock's up about 5.5%, and that could certainly use a boost.
All right. So there we go. EPS, Facebook, 212 versus $1.76. I'm sorry, 212 versus 191, the estimate. So it is a beat on the bottom line.
Starbucks also out in the after hours, up about 1 1/3%. Fourth quarter comp sales up 5% versus a 4% estimate expected. Twitter, a headline.
Making decision to stop all political ads. That is quite a big red headline from Twitter. We're going to talk about that and much more when we get to John Ehrlichman in just a minute.
Stocks down just a little bit in the after hours, down about 1%. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door. It's Dave. Who? Dave.
Hey, Mr. Wilson. Dave Wilson with your stock of the day. What you got?
I've got Crocs, Jason. Their shoes, Crocs. They're made out of rosin foam. The signature footwear is that clog with a strap in the back and holes on the top and sides. And you might remember them because Mario Batali liked them. Of course, he kind of went away in the Me Too scandal. More recently, actresses have served as global ambassadors for the band. And just today, actress Priyanka Chopra Jonas was named as next year's ambassador.
That's a great influencer.
There you go. Crocs was founded in 2002 and went public in 2006. The ticker is CROX. The shares jumped to a record in 2007 and plunged as much as 99% in a little more than a year after that. Crocs has made a comeback lately. The shares rose 84% in 2017 and more than doubled last year. And while they slumped in this year's first half, they doubled from a low in June. Now, Crocs' latest surge was aided by today's release of third quarter results. Earnings and sales beat analyst average estimates in the Bloomberg survey for the 11th straight quarter. That would explain why the stock's done so well back to 2017. And this time around, the company raised full-year forecasts as well. The results and outlook sent Crocs to its highest price since December 2007. And the shares closed with a gain of more than 15.5%.
She's married to Nick Jonas, by the way, in case you were wondering.
Yeah.
Hey, I just want to mention Twitter's down about 3.7% here in the after hours following that news that Twitter's going to ban political advertising from its platform. CEO Jack Dorsey putting this out in a tweet.
Thank you, Dave Wilson, for your stock of the day. That was a really good one. Alice has a very cute pair of little lined Crocs.
They're great on kids.
Let's go to Bob Moon. He's not wearing Crocs. I am highly confident. He's got world national headlines, though. Hey, Bob.
Thank you, Jason. In the area near the Hilltop Ronald Reagan Presidential Library, all it takes is a single burning ember blown by extreme winds to light a tinder-dry tree like fireworks, and in seconds it's consumed by flames. You can hear it happening all around the area about 40 miles northwest of downtown Los Angeles. The new wildfire erupted just before dawn today in the suburbs north of Los Angeles, quickly exploded to more than 1,300 acres and threatened 6,500 homes. Both the north and south ends of the state continue to struggle with blazes, dangerously windy weather, and deliberate blackouts. Another blaze also broke out east of L.A. While Congress awaits public hearings on the president's dealings with Ukraine, his nominee as ambassador to Russia gingerly answered some related questions at his confirmation hearing before the Senate Foreign Relations Committee. Bloomberg's Irv Chapman reports from Capitol Hill.
The nominee is Deputy Secretary of State John Sullivan, who reluctantly had to recall U.S. Ambassador to Ukraine, Marie Yovanovitch. He told Senator Robert Menendez,
"The president had lost confidence in her."
And you were told that by the Secretary of State?
I
I was.
Did you ask why?
Yes, I was told that he had lost confidence in her.
You were aware that there were individuals and forces outside of the State Department seeking to smear Ambassador Yovanovitch, is that correct?
I was.
And did you know Mr. Giuliani was one of those people?
I believe he was, yes.
Which contradicted Rudy Giuliani's assertion that the State Department had a role in his Ukraine activity.
Bloomberg's Herb Chapman. I'm Bob Moon.
In the real world, there are no rabbits in hats, crystal balls, or cards that turn into money. Instead, you get business information from top-tier analysts and experts.
What should expectations be for this latest round of negotiations?
That's actually better, isn't it?
They're both trying to say they have the upper hand.
Bloomberg Markets with Paul Sweeney and Lisa Abramowitz. Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Not completing high school is more of a social thing than it was an academic thing. Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Bloomberg is excited to convene the Year Ahead Summit on November 7th in New York City. Speakers include Facebook COO Sheryl Sandberg, award-winning actor, producer, and businesswoman Sarah Jessica Parker, TPG co-CEO Jim Coulter, and CVS Health CEO Larry Merlo. Supporting sponsors, Pfizer, Workday, Hennessy Paradise Imperial. Participating sponsor, Invesco QQQ. Learn more at BloombergLive.com/TYA. Register with code RADIO.
You know your body, and you know when something's off, when something doesn't feel quite right. Don't ignore symptoms like fatigue, joint pain, rashes, and fever. They could be signs of lupus. Listen to your body. Take care of yourself. We're here to help you take control of your health. Learn how at BeFierceTakeControl.org. Brought to you by the Lupus Foundation of America and the Centers for Disease Control and Prevention.
In-depth.
It's another Wednesday evening. Yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Now the 3-1. And Springer hits it in the air, deep to left field, and you can kiss it goodbye.
MLB fans, you can hear every call of the 2019 World Series on TuneIn Premium.
And that ball's hit well. Left field, high and deep. That's got a chance. Score!
The action concludes today with a winner-take-all Game 7. Will the Houston Astros or Washington Nationals be crowned as World Series champion? Listen live at 8 Eastern to find out. The 2019 World Series is on TuneIn Premium. NFL fans, hear every live game on TuneIn Premium.
He does to the right, throws to the end zone, caught by Fells!
15, 10, 5, touchdown, Green Bay!
This Thursday on Halloween night, hear the home and away call as the San Francisco 49ers visit the Arizona Cardinals at 8:20 p.m. Eastern.
Back, what a block! Touchdown for Tevin Coleman going the other way! Touchdown!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Couldn't. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow @TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Far wing elevates. Triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of after-the-bell earnings reports. Facebook reporting revenue for the third quarter that was 1.7% above the average analyst estimate. Third quarter revenue, $17.65 billion. Facebook shares up by 3.5%. Still awaiting the latest numbers out of Apple. Starbucks reporting fourth quarter comparable sales. A gain there of 5%. Estimates were for an advance of 4%. Starbucks boosting its quarterly dividend to 41 cents a share. It did report fourth quarter adjusted EPS of 70 cents, matching estimate. Shares up now by more than 2%. Lyft boosting its year revenue forecast. Shares up 6.3%. Twitter saying moments ago it will ban political advertising from its platform. That according to CEO Jack Dorsey. The Dow, the S&P, and NASDAQ all advancing. Stocks at a record. S&P up 9, a gain of 0.3%, 3,046. The Dow up 115, up 0.4. NASDAQ up 27, a gain of 0.3%. 10 years up 18.30 seconds at yield 1.77%. Gold up 0.5%, 14.95 the ounce. West Texas Intermediate crude up 1.1%, 54.91 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you very much for that update. You're listening to Bloomberg Business Week. I'm Carol Masser along with Jason Kelly. This is Bloomberg Radio.
All right. Well, Facebook, people liking it, maybe loving it a little bit right now. Shares up 2% after they came out with earnings. Want to talk a little Facebook. Also want to talk a little Twitter with John Ehrlichman. He is the anchor of BNN Bloomberg's The Open, a correspondent for CTV National News. It's a tech-heavy day, to be sure, and here we thought we were just going to be talking about the Fed. But big news from Facebook in terms of their earnings, and big news from Twitter as well. John joins us, as he often does, to break it down in the tech world. So let's start with Facebook and those numbers. Johnny E., what do you see?
Well, the Facebook money machine, Jason, alive and well, and I think this is the reality. Despite all the pressure this company has felt from regulators, from lawmakers on the way they do business, advertisers still love this platform. I mean, the fact that they generated roughly $17.7 billion in the last 3 months in sales. They're astronomical numbers. They this is the third quarter. Every year, like clockwork, it's like they're adding 3 or 4 billion in revenue, and they're now up to about 50 billion in sales for the year. So I think the biggest takeaway is, yeah, the company's reputation has taken a hit, but advertisers still like the bang for the buck that they get from Facebook. And even if there are concerns about them spending more money to address things like data privacy issues and more, they're still packing quite a profit punch with more than $6 billion net income during the quarter.
I'm just blown away. Monthly users climbed to 2.8 billion. Sarah Fryer, our tech reporter, not tweeting, but a part of our Facebook Live blog, and saying if 1.62
Top Live.
Top Live, excuse me. Facebook's blog. It's ours, I promise. But she says if 1.62 billion people use Facebook every day and 2.2 billion use at least one of Facebook's properties every day, that means there's some substantial overlap of people who use more than one service. So just kind of trying to give us some more context in the numbers. But headcount is up 28% year over year. Are they managing costs well as they continue to grow top line?
Well, I think the money affords them to do that. I mean, of course, some of the hiring they're doing, guys, is to try to counter some of this concern about what exactly is happening on the platform that is Facebook. I mean, look, we're heading into. I don't know how long we want to call this election cycle, but there's obviously a lot of money on the table for Facebook to make. And, Mark Zuckerberg was just in Washington facing those kinds of questions, even though he's put forward this position that, look, we don't want to be policing that. People still want some assurances. So hiring people that can do some quality assurance has been part of what they're doing. And just to Carol's point there about the users, I mean, it is amazing. They've found another 35 million people around the world in the last 3 months to add. But it is important to highlight that they do lump together all their users now, partly because that's a strategy to try to distance the idea of breaking up Facebook.
Right.
The more intertwined these businesses are, those lawmakers who have been calling for some kind of breakup of Facebook, maybe have a little bit of a challenge in doing so if Facebook's putting all these businesses together in one group.
All right. So you mentioned the political ads. Twitter saying no more. We're not going to do it. And Scott Galloway, a guest often on this show, you know him as well, John. He tweets very simply, the right move, Jack, meaning Jack Dorsey, your turn, Facebook. What does this mean?
Well, look, I think that anyone who's listened to Jack Dorsey over the last year, he's had a different view on this, this issue on some levels than Mark Zuckerberg. And but I think it's an interesting move for sure by Jack Dorsey and Twitter, which is a different business. I know we talk about Facebook and Twitter in the same breath, but Twitter, remember, they just came out with their quarterly results. Their revenue, and I was just crunching the numbers, it astounds me, their revenue was less than 5% of the revenue that Facebook generated in this last 3 months. So and they're always going to be a second choice for advertisers to Facebook. So it's an interesting strategy move. I don't know how much of their business was directly tied to political ads, but they're making a statement, and they're certainly putting pressure on their rival to maybe follow suit.
John, that's exactly what we're seeing in terms of Twitter momentum. Bill Carter, former reporter for the New York Times, now over at CNN, another individual over at NPR, saying, Mr. Zuckerberg, your move. And you do wonder about what kind of pressure this maybe puts on Mark Zuckerberg and Facebook to kind of rein in some of those political ads that were questionable.
I think it's hard for Mark Zuckerberg to ignore what his own employees are saying. If there is this growing discontent within the company about what they stand for, I mean, that could be an issue longer term. As I said, this quarter highlights advertisers spend money to make money. And if doing that on Facebook works for them, they're going to keep doing it. Until it doesn't, or until the pressure they feel is so pronounced that they need to make a change.
Right.
So we'll have to watch it.
All right. Great stuff, as always. We love the instant context from you. John Ehrlichman, anchor of BNN Bloomberg's The Open, also a correspondent for CTV National News. He joined us on the phone from Toronto.
Twitter shares right now down about 2.3% in the after hours. Facebook going in the other direction, in fact, rallying up more than 2%. Coming up, one of the most read stories on the Bloomberg about which politician might kill the market. It's a great read. This is Bloomberg.
This is a Bloomberg Market Minute. The Federal Reserve cut the cost of borrowing for the third time this year with another 0.25 percentage point interest rate reduction. Each of the key stock indexes rose 0.33% or more. The Dow Jones Industrials closed up 115 points. The Nasdaq closed 27 points higher. The S&P 500 gained 10 points, good for a record high close. Shares of General Electric rallied, closing up 11%. GE's adjusted profit topped estimates in the latest quarter, and the company raised its cash flow forecast for the second straight quarter. Facebook reported after the bell its third quarter revenue topped forecasts. Starbucks quarterly sales beat estimates, and Twitter made an important decision. The short messaging service will stop all political advertising. ADP estimates businesses added 125,000 workers to their payrolls this month. The government's jobs report comes out on Friday. Jeff Bellinger, Bloomberg Radio.
Right now, Doctors Without Borders medical teams are operating in some of the most remote and dangerous corners of the world. When front yards become front lines, at the crossroads of conflict and epidemic, where there are no hospitals, that's where we operate. Your response is critical to our response in places where few others will go. That's where we operate. Learn more at doctorswithoutborders.org.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
It's another Wednesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
NFL fans, hear every live game on TuneIn Premium.
Toss to the right, throws to the end zone, caught by Fells!
15, 10-5, touchdown Green Bay!
This Thursday on Halloween night, hear the home and away call as the San Francisco 49ers visit the Arizona Cardinals at 8:20 p.m. Eastern.
Back, what a block! Touchdown for Tevin Coleman going the other way! Touchdown!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Now the 3-1. And Springer hits it in the air, deep to left field, and you can kiss it goodbye.
MLB fans, you can hear every call of the 2019 World Series on TuneIn Premium.
And that ball's hit well. Left field, high and deep. That's got a chance. Score!
The action concludes today with a winner-take-all Game 7. Will the Houston Astros or Washington Nationals be crowned as World Series champion? Listen live at 8 Eastern to find out. The 2019 World Series is on TuneIn Premium.
For some, Halloween is a little more serious than candy and costumes. To give your Hallows Eve a truly frightening feeling, turn on Soma FM's special Doom Station to hear a haunting seance of soundscapes made for tortured souls, the living dead, and cursed spirits of the night. Search Doom Special and tune in to run a chill down your spine this Halloween.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook,
Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line, with both teams ranked in the top 10. Will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out this Saturday, with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
From the Bloomberg Interactive Brokers Studio in New York, Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And you are listening to Bloomberg Business Week. Apple crossing with its earnings, top line and bottom line beating estimates. That stock is up about 3%.
And the outlook for the first quarter looks like they're up in some of their numbers when it comes to gross margin and first quarter revenue. We're going to talk about that a little bit later on. Actually, Charlie Pellet, let's bring you in.
Let's bring me in because we've got the numbers from the Bloomberg. Let's begin with fourth quarter iPhone revenue, $33.36 billion. Estimates there, $32.25 billion. Apple shares, they're pushing higher right now, looking at a gain of almost 3% on Apple after hours. Also sees first quarter gross margin 37.5% to 38.5%. Estimates 37.6%. So again, Apple shares pushing higher. We'll break down the numbers and we will have more on Apple for you coming up. Busy after hours and what's going on with Facebook. Third quarter sales rose up better than projected, 29%, weathering a period full of regulatory challenges and criticism by boosting ad revenue and adding about 35 million new users to its main social network. Facebook shares, they're advancing after hours, up now by about 2.6%. Lyft blew past analysts' revenue estimates for the third quarter, raising its 2019 forecast, suggesting its efforts to add more active users and gain pricing power are paying off. The Dow, the S&P, and NASDAQ all advancing today, looking at a record on the S&P up 9, a gain there of 0.3%, 3,046. The Dow up 115 points, up 0.4%. NASDAQ up 27, a gain of 0.3%. 10-year up 19.30 seconds, yield 1.77%. Gold up 0.5%, $14.95 the ounce. Again, taking a look at Apple after our shares pushing higher after earnings, up now by 2.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie, thanks so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
This is one of our most read stories. I know it's not one that you hear a lot, but it's a great one.
But it was part of the Live Aid concert. If you've seen Bohemian Rhapsody, it figures prominently there.
That movie.
It's a great movie.
This is among our most read. Love the headline. Obama will kill the stock market. No, Trump will. No, Warren will. Do you see a pattern, anyone? Well, this is another great story by our own Sarah Ponczek. She's cross-asset reporter at Bloomberg News. I don't think she sleeps because she's on TV, she's on radio, and she's constantly writing. And it's often among the most read stories. She's in our Bloomberg Interactive Broker Studio in New York. Tell us about the story. This is like spot on.
So the idea of this story was that over the past week or so, we heard the likes of Paul Tudor Jones come out and say that if Warren wins the presidency, the S&P 500 is going to fall 25%. We heard Leon
Jason
Cooperman.
And I had fun with that story, but anyway, go ahead.
Anyway, but he isn't alone. I mean, we've heard Leon Cooperman come out and say that the stock market will fall 25%. We've heard others say that she is the biggest single risk to the stock market. And we wanted to say, wait a minute, we hear this almost every single election cycle. If you think back to 2016, before President Trump was elected president, the amount of predictions out there that were crossing the wires saying that if President Trump won, then maybe the U.S. economy would fall into a depression or the stock market would fall into a correction as much as 15%. None of that happened.
And futures did fall when he was initially elected, and then they turned around.
Exactly. And JP Morgan actually put out a note after that initial fall when we saw that rebound saying, sell the rebound. We're likely going to see stocks turn lower again. That's what they said in 2016. So the point of this is kind of just to be a gut check. Say, wait a minute, really think about it before you take any of these predictions seriously.
And so what is predictive about politics when it comes to the market? Nothing. We sort of don't know, and we just spend a lot of time speculating about what might happen. What does the market history tell us here?
Well, I think it is a bit easier to make predictions about certain areas of the market. So some people talking about oil services companies, if Elizabeth Warren does indeed get through and ban fracking, or what's going to happen to healthcare companies if universal healthcare does indeed push through. But the issue is, for those who are looking at a broad spectrum and saying that her policies are going to completely take down the stock market, ruin the stock market once and for all, well, the question becomes, if you look at her policies, how many of them are actually going to get through in the form that they stand now?
Because what the kind of Congress that she potentially as president has to work with will be very much an indicator of what ultimately gets done.
Right, absolutely. And also, you have to think about, when it comes to a president and their policies, which ones do they actually focus on? What happened with President Trump was that so many people were focused on his protectionist policies, that people were saying if he really takes this hardline stance with trade, that's going to be a major issue. What they looked past was his pro-growth policies as it came to the corporate tax cuts, which is really what has been the genesis of much of the market gains since that election.
I love in your story you say variations in equity performance when a Democrat is in the White House are almost negligible when compared with Republicans.